Hey, what's up everyone, and welcome to the School of Personal Finance. Today's video, we're going to talk a little bit about where I think the markets might be headed. I'm also going to walk you through some moves that I'm personally making as I'm in the process of selling one of my rental properties. I'm also going to talk about what I think I'm going to do with that money once this sale actually goes through, and just how the outlook looks from here to year end and how I'm kind of positioning myself. All right, let's get to it. All right, so real quick before I jump in, make sure to head over to schoolofpersonalfinance.com, sign up for my email list. I'm about maybe 6 weeks away or so from launching my financial education center, where I'm gonna have all different courses. I'm gonna have webinars, office hours. I'm gonna hold monthly accountability meetings, all for a low monthly price, yet to be determined. So I'm trying to work out all the kinks, get all the content up there and figure everything out. But join my mailing list and I'll send you out emails as I get closer to launching with all the details. All right, so starting with the stock market, Jerome Powell and the Federal Reserve, they just finished up their most recent meeting, and they made it pretty obvious that they are going to start tapering sooner rather than later, maybe as soon as November. So now what does it mean, tapering? You hear that word thrown out all the time. And basically all it means is that the Federal Reserve, they have been buying like $80 billion of Treasury securities every month and $40 billion of mortgage-backed securities every month. So they are just plowing this money into the financial system at a rapid pace, and it's what's called quantitative easing. So typically they do that when they want to keep rates low. They are creating demand for these bonds by buying them and keeping the interest rates low, which is good for the economy. It keeps mortgage rates low, car loans low, interest rates across the board, it keeps them low. Tapering is when they're going to stop making those purchases. So once they stop making those purchases, then the market is going to have to absorb these bonds in order to keep them at the current levels. If they don't, then we might see a rise in interest rates. Now, we've had a little dip in the market over the last week or so, but Wednesday, when this meeting came out, the day before, the market was up and the market continued going up after this meeting. So the dips, if you're waiting to buy the dip, it's been an impossible market because the stock market just has not had a meaningful correction in a long time. So the market from peak to trough for this dip was like 4.5%. So it really didn't give you that great of an opportunity to get in if you've been on the sidelines, which is why I always preach dollar cost averaging, right? That's why 401ks are so great, because you're just throwing money in there every 2 weeks and you're not trying to time the market, because timing the market, it is impossible. It is a fool's game trying to time the market. So if you're just consistently investing, that is really the best way to go long term. And now I just want to be very clear in this video, any opinions I throw out there or predictions, take them for what they are worth. I don't know what's going to happen in the future. Do not take any investment advice from me. I don't know anything about your situation. Moves that I might make in my own portfolio, they might not apply to you whatsoever. So with that said, I do think that the market is setting up for a year-end rally. The fourth quarter is typically very strong with the stock market. We have everything pointing to this market continuing going up as we continue to climb the wall of worry. We need to get through a couple more hurdles, like this whole debt ceiling fiasco that's about to take place in Congress. But once we get through these things, this market, it might just rally through the end of the year. And there's so much cash on the sidelines that any dip that happens, money just flows in. So if we really start to get a move up in the markets, you might have people on the sidelines who don't want to miss out on it, and they might just, start jumping in, pushing the stock market even higher. So through the year end, I do think that the market is positioned pretty well to have a strong rally. Now again, it could do the exact opposite of what I think it's going to do, and that wouldn't be very unlikely. So don't, take too much faith in what I'm saying right here, because again, nobody knows for sure. But I do also believe if we do get this big year-end rally, that as we get into 2022, that it's definitely going to slow down, that we could see some kind of meaningful correction, a revert back to the mean, so to say, in 2022. We just can't continue on this trajectory of growth that we've seen since the pandemic. All right, so now let me share with you a little bit about why I'm selling one of my rental properties and what the numbers look like when it's all going to be said and done. So now I wasn't planning on selling any of my properties. Obviously, real estate has had such a tremendous last few years where the growth has been insane. So I didn't hate the idea of cashing out of one of them and reallocating that money towards other things where I feel that I might be lacking a little bit. So it just happens to turn out that somebody that I know recently sold a rental property, and they were looking to take that money and buy another rental property, a new build. But because of supply constraints, their new build got delayed. And now they were doing what's called a 1031 exchange. That's when you exchange, you sell one property and you basically parlay it into another property to defer the taxes. So by selling one and buying another property, he would be able to defer the taxes on the sale of that house. But now, because the new build was being delayed, you have to do it within a certain time period, and he was going to miss out on that. So I decided to sell him one of my rental properties down in Memphis, Tennessee. So even though I had no intention of selling any of my rental properties this year, the opportunity came. I don't have to use a real estate agent, so I was going to save on that fee. The markets are basically at all-time highs. I figured, maybe it is a good time to get some cash out and redeploy that into other things. So now I thought you might find it interesting if I actually show you the numbers, what I bought it for, what I sold it for, calculate the rate of return. Now I'm using estimates here for full disclosure. The market has been great, so you cannot expect returns like this. And I'm not doing it to say, oh, what a great investment I made. I just got lucky, right? I bought a house at the right time. The market really went up, and now I'm selling it and realizing the gain. And I'm not doing a 1031 exchange. I'm not exchanging this house into a bigger property. I'm taking the cash and I'm going to pay taxes. I'm going to pay capital gains taxes on the growth of this investment. But in no way am I advocating for you to do this or making the assumption that this will continue into the future. If you buy a property today, you could have a negative rate of return if housing prices go down. So just for entertainment and educational purposes only, I'm going to run through the numbers with you real quick. All right, so I'm going to go ahead and walk you through the numbers right here. So now I bought this property back in April of 2017. So it has been 53 months that I've owned this property. My purchase price was $82,000 and I only put 20% down. So I got a mortgage of $65,600. So my 20% down payment was $16,400. And then I had closing costs and I had to pay escrow and insurance, and that was about $4,200. So my total out-of-pocket cost when I bought this house was $20,600. And I'm going to put this right here as the present value in my financial calculator. So that is my out-of-pocket money, $20,600. And now over the course of owning this property, I'm making an estimate here, but it's pretty damn close, that I averaged positive cash flow of about $200 per month. So after my mortgage payment, my taxes, my insurance, the cost of the property manager, any maintenance, turnovers, all of that stuff, I averaged out to making about $200 a month of cash flow in my pocket. And now I'm selling this property for $115,000. So like I mentioned before, a nice thing is I'm not paying any realtor fees. Now I do have the mortgage that I have to pay off on it, where the current payoff is about $58,000. So the net amount that I'm going to be receiving after paying everything off is going to be $57,000 in my pocket. So I'm going to put that as my future value, $57,000. So if we just look at this real quick, I'm going to put 53 in for the number of months. So my initial investment, $20,600. I received $200 a month over those 53 months. So that's about $10,600 in cash flow I've received over those 4.5 years of owning the property. And then the $57,000, that's going to be my net proceeds after paying off the mortgage. All right, so the rate of return for that annualized would be just under 31%. So pretty good. This property worked out very nicely. Now, who knows what the future is going to hold? I mean, the timing was just right on this thing. Who would have known that real estate prices, especially in Memphis, where the market is usually pretty linear, meaning it usually only goes up a few percentage points a year to keep up with inflation. But who would have known that, with the pandemic, that we'd have such a spike in real estate prices? But I hope that you found it helpful going through these actual numbers. And if you have any questions, leave them down below. But compared to like the S&P 500, over this same exact time period, the S&P's been up a little bit over 17%. So I have done better by investing in real estate, but like I said, you just don't know from one year to the next or one decade to the next which one is going to outperform. And that's a big reason why I like owning some of everything, because you just don't know what the future holds. All right, so now that I'm going to have around $57,000 coming to me from the sale of this house, the question is, what do I do with it? I don't want to sit it in cash because, like I said, I think that asset prices are going to continue going higher through the end of the year. And there is one piece of the economy, one piece of the market that I really have no exposure in, and that is crypto. So I've mentioned crypto on this channel here and there, that I think it's a good idea to have a small piece of it in a diversified portfolio. And I did buy Bitcoin and Ethereum back in 2000. 2017. I made a little bit of money. I sold it also in 2017, and I haven't gotten back into it since then. So I've watched as it's continued to go up. Hindsight is 2020, but obviously I wish that I would have held on to, all the crypto that I had back in 2017. But I did it as a trade. I didn't really trust in it. I didn't really understand it. I still don't really understand it, but I really didn't understand it back then. So I just looked at it as a trade. I made a little bit of money and I got out of it, and I just haven't revisited. But now I want to have exposure to crypto. So if everything goes through with the sale of this property, I do plan on taking some of that money and at least buying some Bitcoin, some Ethereum, maybe some Cardano, and having a little diversified portfolio of crypto as well. Again, I'm not going to do it with all the money. It's just going to be a small piece of my overall investment portfolio, but that is my plan for where to put that money. And hopefully we get a big run in crypto, into the end of the year, along with stocks, along with real estate, along with all assets. But there's a ton of risk to owning crypto. Like, you could wake up one day and be down 40%, and you just have to hang on and hope that, eventually it comes back. So again, I'm not advising you to invest in crypto. It is very volatile and very risky. So you have to have money that you're willing to lose that you do put into these cryptocurrencies. But for me, it just kind of fits my whole risk tolerance, and I do want to have exposure to it. All right, everyone, that is it for this one. I hope that you found it helpful. Now, just because I'm making some moves, I didn't even really plan on making these moves, but just because I'm making some moves doesn't mean that you need to make any moves as we get into the end of the year. If you're just contributing to your IRAs, your 401ks, building your wealth, I don't think you need to change anything right now. Obviously, you want to see where this market goes, and if you need to rebalance or do anything along those lines, you want to get your IRA contributions in, before the deadline, before the tax deadline, take advantage of all the opportunities that are out there. But overall, just keep on plugging away, invest in your money, grow in your wealth, and I will see you again in the next one. Thanks.